It looks to me like really from the the third quarter of this year, in other words, following the end of June, the derivative world is going to sort of evolve into a very different place, because the UK banks, the members of the LBMA, are not going to hang around until the end of the year. Isn't the establishment shooting itself in the foot? That's the question which really arises from this. But I think the way to look at it is just imagine yourself in the shoes of someone given this task in that committee. You will be aware, perhaps more aware than general members of the public, of the shenanigans that go on in the derivatives markets. And if you are aware of what's going on in derivative markets and the crookedness and the spoofing and all the rest of it, then surely that is a source of enormous risk to the international banking system, and it has to be cleaned out. And I mean, I've been thinking about this, and I think that is basically the answer. The interesting thing is that as far as the Prudential Regulatory Authority, which is our bank regulator, is concerned, I don't think they can come to the rescue of the LBMA on this either, because, I mean, European regulations are coming in within 4 or 5 weeks. It is inconceivable, really, that the British regulator would fail to follow the European regulator on this. I mean, I just sort of imagine, the whole thing would just get absolutely nonsensical, because quite obviously the regulator will be leaning over backwards to allow business which, as far as the Bank of International Settlements is concerned, they have labelled as risky and needs addressing. So I can't see that the PRA has got any alternative. I mean, the reason this really came up was the PRA actually decided to consult the industry, and the consultations had to be in by the 3rd of May. The LBMA wrote a letter which basically said, with the support of the World Gold Council, that, unless you do something about this, we're going to be out of business. I mean, it was almost as blunt as that. You didn't have to read between the lines, for goodness sake. So this was absolutely clear. And I must admit, that sparked my interest in this, because I thought, no, hold on a minute, this is very, very serious. So I decided to really look into it, particularly because I'd heard a certain amount of commentary on it. And it seemed to me that the commentary, in a sense, it's understandable. It was misinformed, because the whole situation is actually really quite complex. And we're talking about deep regulation, and we're talking about bank speak of the sort that nobody actually usually bothers to try and understand. Anyway, that is the conclusion. And it looks to me like really from the third quarter of this year, in other words, following the end of June, the derivative world is going to sort of evolve into a very different place, because the UK banks, the members of the LBMA, are not going to hang around until the end of the year. And we've got an immediate problem, and that is if you look at COMEX. Now, this is the visible side of it, but if you look at COMEX, the swaps, which are the bullion bank trading desks, are net short of around about $28-29 billion worth of gold. And they're desperately trying to close it. I mean, look at the way the gold price is behaving today. They want to bang it. They want to get it down, because the active contract is running out. It's rolling out. This is the June contract. And there are lots and lots of option positions. They want to expire worthless. I mean, this is what they do. So this sort of, manipulation of the market is going to come to an end. And they know it. And they're desperate. And it's very difficult to see how they can square their books. So, if you've been victim of this this continual manipulation of the market, you may be laughing. I think the whole thing is actually very, very sad insofar as it had to happen. But given that it had to happen, thank goodness it is now finally happening. The more I look at it, as I say, if you look at it from the point of view of the Basel Committee, they've got to clean this one up. And also the fact that it is coming in at the end of June for Europe, quite simply, there isn't time. There isn't time now. This is going to happen. So, and when it happens for the European banks, it's going to happen for everybody else. It's only just delayed by 6 months. And basically, it's 6 months for everybody to close down their unallocated gold business. It's the end of unallocated gold business in London, and high time too, because the LBMA in their letter actually, I think, were marginally dishonest in their approach. They described unallocated gold as gold. It's not gold at all. The way it works is very, very simple. You can create a credit to give to as a bank, to give to your dealing desk to trade in gold. It's very, very simple. And you can show it on your balance sheet on either side, if you want, as unallocated gold. So this is not gold. This is money. This is currency, credit currency created out of thin air, which just happens to market to the gold price. That's all it is. It's not gold. And it's fundamentally dishonest. And furthermore, the way in which they have approached this, they could have done a slightly different thing. They could have turned around and said, okay, this is not gold, this is a derivative. But to get the LBMA to agree that this is a derivative and not gold, that opens a huge can of worms about the whole process. What actually is the LBMA doing? What are the members doing? What are they trading in? This idea that you trade forward settlement, unallocated gold is meant to be convenient. Oh, come on. This is absolute rubbish. If that was the case, where are they storing this unallocated gold? It doesn't exist. I can tell you that the gold liquidity in London is just a few hundred tons, no more than that. I've become so cynical about the system. I'm with that cynicism entirely. But really looking at this, I'm finding it increasingly difficult to see how this cannot end, as it were. I'm finding it increasingly difficult to see how this unallocated gold trading, which is a complete myth, which the committee understands, incidentally, how it can continue. It's got to come to an end. And this is the important thing. We've got the whole of the sort of the bank risk thing is actually now so important, particularly in the wake of COVID, because the bad debts, particularly in Europe, the bad debts are mounting hugely. The bad debt situation in America is understated. From all the information I have, with small businesses, small and medium-sized businesses throughout the nation, 25% of them wiped out, I would think is probably a conservative guess. It's only really the big businesses who've, had sort of lots and lovely subsidies and kept going by the banks because the banks don't want them to go bust. In other words, all the zombies are still there. But the real productive side of the economy has, been decimated. Under those circumstances, how can bank regulators backtrack this situation? I really cannot see how they can do it. And now, the European Banking Association, I think, is probably, I don't know, it's difficult to say. Local bank regulators in Europe are great ones at kicking the can down the road and trying to remove a problem from their patch, as it were. And they've been using Target 2, the Target 2 settlement system, to do that. So what they do is they turn around and they say, these non-performing loans will say they're performing so that you can use them as collateral to borrow money from the central bank. That's the way the Banco d'Italia and the Spanish central bank have been feeding money into their banking system, taking basically bust collateral in exchange. And so it pushes it into the Target 2 system. So we're looking at a Europe which is already, from the regulatory side on a local basis, completely corrupt in the way it behaves. So how can the European Banking Association have any credibility as a regulator, effectively, of the regulators? But it's turning around, and within the next 5 weeks, anyone trading in the gold market, on unallocated gold, are going to face effectively financial penalties. But I think one thing is absolutely clear. This is going to happen, and London has no alternative but to follow.